Coming up on today's program, African Development Bank sells record $3 billion debt issue as part of efforts to raise financing to help combat the fallout from the coronavirus outbreak. And Moody's is expected to cut South Africa's sovereign credit rating later today as a recession dampened by the impact of coronavirus frustrates economic reform efforts. Plus, Egypt reduces GDP growth target for the current fiscal year 2019 to 2020 to 5.1% amid the coronavirus outbreak. It's good to have you on Business Incorporated today. I am Bisi Adebayo. Well, markets in Africa will mix at intraday with South Africa's JSE sustaining the bearish sentiment, trading down 2.52%, while Nigeria's index gained 0.36%. In Egypt, the index closed the week negative on Thursday by 0.48%, while Kenya closed positive on Thursday. And most major Gulf markets lost steam on Thursday, ending a two-day rally triggered by the giant $2 trillion stimulus package in the United States to mitigate the economic blow from the fast-spreading coronavirus pandemic. The Abu Dhabi index sank 3.84%, with the country's largest lender, First Abu Dhabi Bank, and telecoms firm Etisalat dropping 5% and 4.9% respectively, while Dubai's main share index slipped 0.76%. Elsewhere, the Qatari index lost 0.65% as Qatar National Bank declined 3.5%. Only Saudi Arabia's benchmark index closed the week positive 1.90%. And European stocks declined on Friday as investors continue to monitor the spread of the coronavirus while policymakers scramble to agree on a unified response. Let's bring in Chelsea Delany live from the Frankfurt Stock Exchange to tell us what's happening today. Good afternoon, Chelsea. European stocks slipped today after 3 straight days of gains. Where do traders see the markets going from here?
Well, there's been 2 major narratives in markets over the past week, and that's one reason why we've seen some really volatile and kind of confusing moves in markets. One of those has obviously been the enormous stimulus measures that are coming out of the U.S. And also here in Europe. The U.S. the House is expected to pass this $2 trillion stimulus plan. Here in Germany, a stimulus plan worth about 750 billion euros is also making its way through Parliament. That's really given a big boost to markets, but at the same time, we've just seen some really grim data, really the first reads on how this is impacting the real economy, and it's all pointing very bad. Record declines in European economic activity, 3 million jobless claims in the United States, and now that the stimulus measures are sort of priced into markets, I think we're going to see more reaction to the virus itself, the economic data. But the main question for investors is how long are these shutdowns going to last? And at this point, a lot of investors are sort of betting on a quick reopening of the economy, something in the next few months. We've seen a lot of countries here in Europe, including Italy, just now indicating that they're going to extend the shutdowns. That's something that could certainly be the next driver for markets.
But European leaders are clashing about the path forward for economic stimulus measures to offset the impact of the COVID-19 within the bloc. What are the next steps for the EU?
Well, all we've heard from European leaders over the past few weeks is solidarity, that they're going to do whatever it takes to help economies in the Eurozone. And this is really sort of falling apart right now. Yesterday, there was a call among EU leaders, and there was a lot of controversy and a lot of clashing among EU politicians about what the response should be from governments. We've seen some countries here in Germany, for example, as I mentioned, we've already seen stimulus measures coming through, but a lot of the countries that are getting hit hardest, Italy, Spain, really have only a limited ability to introduce big stimulus measures because their public finances are a little more constrained already. So one of the big ideas has been these Corona bonds. We've talked about this a lot. This would be a joint bond issuance among EU countries, so it would help bring down the borrowing costs for a country like Italy that already has a lot of debt. This has been really highly opposed by Germany and the Netherlands, countries that are a bit wealthier, and that was really the main clashing yesterday. we had hoped, a lot of economists had hoped that this would really be the moment that the EU takes this big move towards solidarity. It doesn't appear to be the case. So right now, all the EU finance ministers are taking the next 10 days to come up with different proposals, and then they'll come back and have these discussions again.
Well, the head of online bank N26 says contactless payments are on the rise in Germany as coronavirus reshapes daily habits. Could this be the end of Germans' love for paying with cash?
Yeah, I think that's an interesting question. Germany is kind of known for being really reliant on physical cash, more so than other countries in Europe, and certainly more than an economy like the United States. If you pay for something in a bar, in a restaurant, you typically do it in cash. This is all really being turned on its head now with coronavirus. We're seeing a lot more stores, a lot more grocery stores, pharmacies, really emphasizing the need to pay in cash because this is more hygienic. The N24 bank, they estimated that the cash payments have risen to 75% of transactions from 50% before. And just sort of like this is making everybody rethink their things like hygiene habits, how often you wash your hands. I think this could also force people to reevaluate how often they pay in cash.
Interesting, Chelsea. Many thanks for this update, and do have a great weekend.